Hey there, savvy investors. Pat Walker here, ready to guide you through the twists and turns of today's market action. Grab your favorite beverage, get comfortable, and let's dive deep into what's moving and shaking on Wall Street. Folks, today was one of those days that might seem quiet on the surface, but trust me, there was a whole lot brewing underneath. The stock market ended almost exactly where it started, but don't let that fool you. There were plenty of stories unfolding that could shape our investing landscape in the days and weeks to come. Let's start with the S&P 500, the index that many consider the heartbeat of the market. Today, it took us on a bit of a roller coaster ride. Early in the day, it dipped below its 50-day moving average. That's a level we watch closely, sitting at 5,506. It's like a safety net for the market. And when we bounce off it, it's usually a good sign. Now here's where it gets interesting. Later in the afternoon, we saw another dip below this key level, but by the time the closing bell rang, the index had clawed its way back above it. This kind of resilience is what we like to see, folks. It shows there are still buyers out there ready to step in when they see value. When we zoom out and look at the broader market, it was a real mixed bag today. We use something called market breadth to gauge how many stocks are going up versus down. Today, that measure was as clear as mud, which explains why the major indexes didn't move much. Even some of our big tech giants were doing the cha-cha, moving back and forth without clear direction. Take Nvidia, for example. This chip-making powerhouse had a wild ride after some news about a potential Department of Justice investigation hit the wires. The stock dropped on the news, then bounced back when the company denied the report. It's a reminder of how quickly things can change in this market, especially for high-profile companies. Now, here's where things get really juicy, folks. We got the JOLTS report today that stands for Job Openings and Labor Turnover Survey. It showed that job openings have fallen to their lowest level since early 2021. In normal times, that might sound like bad news. But in our current topsy-turvy economic world, it actually got investors excited. Why? Because it might mean the Federal Reserve will cut interest rates sooner rather than later. In fact, the odds of a big rate cut in September have gone up significantly. The market now thinks there's a 45% chance of a half-point cut, up from 38% just yesterday. That's like catnip for the stock market. Let me break this down a bit more. When job openings decrease, it usually means the labor market is cooling off. The Fed has been trying to slow down the economy to fight inflation, and a cooler job market is one sign that their strategy might be working. If they think they've done enough, they might start cutting rates to avoid slowing things down too much. And lower rates? Well, that's generally good news for stocks. Now, let's break down the winners and losers by sector. It's always fascinating to see how different parts of the market react to the day's news. Real estate and utility stocks were the day's champions, both ending in the green. These sectors tend to do well when interest rates might go down because they often pay nice dividends, making them more attractive when bonds are yielding less. On the flip side, energy stocks took a hit. Oil prices dipped below $70 a barrel, which isn't great news for companies in this sector. We saw crude oil futures settle at $69.13 per barrel, down about 1.8%. This drop reflects ongoing concerns about global economic growth and its impact on oil demand. To give you the big picture, let's look at how the major indexes are doing for the year so far. The S&P 500 is leading the pack, up 15.7%. The tech-heavy NASDAQ composite isn't far behind, with a gain of 13.8%. The good old Dow Jones Industrial Average, representing 30 of America's biggest companies, is up 8.7%. The S&P Mid-Cap 400, which gives us a view into slightly smaller companies, has risen 8%. And the Russell 2000, representing even smaller companies, is up 5.8%. This performance shows us that larger companies, especially those in the technology sector, have been driving much of the market's gains this year. Today wasn't just about stock movements. We also got some important economic data. The trade balance report showed a deficit of $78.8 billion, slightly wider than expected. While a bigger trade deficit might sound bad, the increase in imports could actually be a good sign, suggesting strong demand in the U.S. economy. Tomorrow's going to be a busy day for economic data, folks. We've got more job market information coming our way, including the ADP employment report and weekly jobless claims. We'll also get a revised look at productivity and labor costs for the second quarter, and the ISM non-manufacturing index, which gives us insight into the services sector. All of these reports could give us more clues about what the Fed might do next. Remember, the Fed's decisions on interest rates can have a big impact on the stock market. So savvy investors always keep an eye on these economic indicators. Remember, investors, even on seemingly quiet days like today, the market is always telling us something. It's our job to listen carefully and interpret the signals. Stay curious, stay informed, and most importantly, stay invested in your financial future. By the way, have you checked out our free lessons on missionwinners.com yet? If not, in the top right, I will link one of our latest. We will be coming out with more of these lessons often. Please let us know in the comments below what you scored on the quiz or your thoughts on the lessons. In times like these, with mixed signals and potential changes in Fed policy on the horizon, it's more important than ever to have a well-diversified portfolio. Don't put all your eggs in one basket, and always invest with your long-term goals in mind. Before we wrap up, I want to remind you all how much I appreciate your support. If you found this market update helpful, please hit that like button. It really helps more people find our content. And if you haven't already, smash that subscribe button to make sure you never miss an episode. We're here every day, breaking down the market moves so you can make informed decisions. Confused about something I said? Or maybe you have a question? Drop a comment below. I try to respond to every single one, and I love hearing from you. Your questions and insights not only help me create better content, but they also help our whole community of investors grow together. This is Pat Walker, signing off. Until next time, happy investing, and may your portfolio always be in the green.